Good evening and welcome to tonight's webinar where we look at member-only content, ASX investment opportunities in review for 31 May. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to discuss more about that, please contact me on 1300 614 002. The technology we're using tonight is the Investor Signals member area. If you're joining us as part of your 30-day free trial, if you would like to gain some extra tuition on how to navigate around the technology and set up the model portfolio alerts, please contact me on 1300 614 002. The graph on screen's the Nasdaq, so just to draw your attention to what we're looking at here, just mindful that we've seen a correction in risk assets, and as I've mentioned in prior weeks, if we think about the sell-off in cryptocurrencies or something like Tesla or chip stocks, AMD, and some other tech companies in the US. So we've seen a less risk appetite in the market for high PE and relatively high risk assets. In some cases that correction's sort of anywhere from 20% to almost 50%. So we're mindful that is there something happening beneath the surface here that we need to be cognizant of. Where we would see that show up, I think the quickest is here in the Nasdaq, so we continue to look at this as a barometer of the risk appetite of the market. We're coming from levels where the PEs are fairly high, but the technology sector still has obviously attractive growth thematics long term, but it's just a question mark around valuations at the moment. So we've got a double top here. That in itself is not enough to be cautious. So what we watch here is this move a corrective move where we've had the sell-off down, a bounce back? Are we setting up a pattern where the Nasdaq can simply carry on in the same way it has done, post the COVID sell-off in March? So do we get a continuation of higher highs and higher lows and it continues to move higher, or are we getting to a period where we get a slightly different pattern evolve, where the market runs into resistance at a lower high formation? So I've put in a resistance line there roughly at 13,800 thereabouts in the index, but more importantly what we'll be watching is, do we get a rollover in the stochastic and do we eventually get the price action back below this 10-day average? The chart, just looking at that Nasdaq a little closer, click on watch list. I've set this up in my personal watch list. You may wish to do the same, but the Nasdaq index, so here's just a closer look at what we're looking at there as a screenshot. So you can see here the market for the moment is above the 10-day average, which if you go back to last week's recording, I highlighted that we were likely at the beginning of a risk on move in the market, which kept us sort of exposed to fairly aggressive positions in the market over the last week. But we just start to now look again to narrow the number of holdings in portfolios, look to de-risk a little, just to see whether we're coming into a period where the market sort of struggles below this. I'll draw your attention to sort of if we see that price action below the moving average, and you'll see a sort of pick up in commentary around a couple of short opportunities in the market. With that, tonight let's move into the what I'll do this evening, so we covered the top 100 last week, I'll move through the recent blog posts and we'll focus on the ASX 50 tonight, and I'll conclude with a summary of the high conviction opportunities that we're focusing on. But just to make sure you haven't missed anything from the blog here, we get the percentage gainers to the top. We organise in buy. I'll just type that one in, which is the China ETF. So this is one that I've been flagging on the blog. Some of the manufacturing data, export volumes have been a little bit soft out of China. Whether that can cap this rally at around this $60 level, but I still see deeper value here than in US equities. So I think the downside risks are relatively low. So for the moment, we're staying long that position there in the IZZ. Just bigger. This is one that I've been flagging on the blog. We had the correction from 650 down to 580. We've had the algorithm buy signals. Today's the first close above the average. We started setting positions at around that sort of 578, 580 level. I'd anticipate, and we'll have a closer look at the expected earnings growth, but Bega should deliver high single-digit earnings growth, plus they've got cost synergies from a recent acquisition. I'll discuss this in more detail over the coming days on the blog, but you can see there the setup there. We've got the correction lower within the uptrend. We're under algorithm buy conditions. The stochastics moving higher, and today's close is above the moving average, so quite a good technical setup there as well. Northern Star still continue to like this as my favoured sort of exposure to the gold sector. I've been drawing your attention to that. Xero, it is expensive, this business, but they are growing, delivering profit margins of around 15%. Subscriber numbers are growing. Expansion into Europe looks promising. So we continue to rate that quite highly and continue to be a buyer of the dip there on Xero. Pro Medicus, algorithm buy signal there at $40 now, pushing 46, high quality stock within the medical industry, focused particularly on imaging. Breville Group, I don't cover this in great detail on the fundamental side. I'll start reading up a little bit more, but support there at around $25, price action now pushing 27, so just focused your attention there around the recent algorithm signal. Altium, take a look at this. I think it's rallied 20% from where I first made a post about this. What we're really looking for is probably a pullback and a retest, so I'll just be a bit patient on that, and we'll revisit that in a week or so, especially if we get some selling pressure in the Nasdaq. PointsBet, again, not a stock that I follow too closely from a fundamental analysis standpoint. From a technical point of view, we've had the algorithm buy signal here at around $11, now pushing $12.80. I'd be approaching this probably with a little bit more caution, and think about running a stop loss on a break below, certainly below that $11 level, and maybe then if it was to break below that, apply your stop, and then think about it again on the next bounce in the Nasdaq where you get price action above the moving average. So I'll continue to provide some commentary around the strategy there with PointsBet from a technical standpoint. Macquarie Bank under algorithm buy conditions. We've switched out of CBA for the most part, taking some exposure to Macquarie, but I do think we're probably more likely to see Macquarie bounce sideways, especially if we get into a little bit of a risk-off mood in US equities. Lendlease, looking for an improvement in the earnings outlook here. And we'll be watching or reading with great interest any commentary from the company around sort of the next 6 to 12 months outlook. Woolworths, I think this is a safe place to have capital parked at the moment. You're getting a reasonable over 3% dividend yield. We've got the spin-off of Endeavour Drinks next month. Right at the moment, I think there's the upside's probably largely captured. We had the rally there from around 38, which is obviously the time that I was drawing your attention to it. Now up at 42. There might be a little bit left in it, but not too much. But we'll sit on that while we wait for the spin-off there of Endeavour Drinks. Treasury Wines had a good rally from 10 up to 11.60. As long as it stays above the average, happy to stick with that, but probably getting to a point where short term it just starts to run into a little bit of profit taking. Cube had a fairly negative day today, but obviously I like this off that 290 level. Hopefully that holds on any pullback. Incitec Pivot, think about this. and the story here really is a second half recovery in earnings. The company was faced with some plant shutdown issues, unexpected operational issues, and they need to make up capacity or supply in the second half of the year. So one of the triggers here would be to look for the price action to close above that 10-day average, but thinking that around that 220 level is a good support level there for Incitec Pivot. Woodside, even though oil prices were reasonably strong today, we've seen another close on the low, so it's been a slow sort of trickle down here, but looking for support at around $21. Within the energy space, the only one we've really got exposure to at the moment in portfolios is Woodside, and just continue to monitor that. Kina Securities just provided some commentary there and drew your attention to support at around 95, but we don't have that in portfolios as yet. Likewise with Zip, drawing your attention to the algorithm there at around this sort of 620 level, but we haven't added that into portfolios yet either. Amcor, keep an eye on this. There's some commentary in the market about the Aussie dollar breaking higher. It'll be interesting to see. Obviously, if we get a risk-off sentiment build in the market, we could see the US dollar surprise by breaking higher, which is more the unexpected in the market, and often the unexpected plays out. So if we were to see a strong US dollar, companies like Amcor, Brambles are going to benefit from that. It is under algorithm sell signals at the moment. I was looking for a pullback below 15 down to 14.75 as my entry level. Hasn't got there, and I'll monitor this. But given that Amcor upgraded earnings recently to 11 to 14% growth, which is quite attractive in this market, especially in a relatively defensive business. I think that needs to stay on the radar, and would certainly be buyers of that if we saw it back below that $15 level. A couple of counter trend trades that I've been commenting on. Insurance Australia Group, you can see there that I've put support there at around 475. A reversal lower below that, you'd want to be running stop losses. Car sales, after doing the equity raising here, the stock has rallied from sort of that 1750 level up to 19. I'd like to see this kind of roll over and have another leg lower, and then we'll take a look at that on a pullback or a consolidation around that 1750 level. CIMIC Group, this is marching higher from sort of the 1750 level where I started talking about it. We're now pushing up to $21. Over the next 12 to 24 months, there's the backdrop where we could see this back up at sort of more that $25, $30 level. So we continue to have a decent exposure there to CIMIC Group, which is one that I've been commenting on the blog. So again, if you're using the technology for the first time, or you're just not familiar with some of the features, click on watch list, come down here, select recent blog posts. It stores the last 30 days of stocks that have been commented on the blog, and you can scroll through those. For tonight, we'll focus on the ASX top 50, so I'll come back up the top here, click on top 50, get the percentage gainers to the top. Range it by buy signals first, so as we move through these, it'll be the best percentage gainers under buy signal. We'll get a certain way through the list, and it'll shift from buy into sell, and I'll just draw your attention to when that happens. So zero, as I mentioned earlier, we like this. Be a buyer of it on a dip, and so in the weeks ahead, if we see a correction back down to that 110 support level, be a good opportunity to buy into it. Fortescue, we continue to hold this, and iron ore's come off from recent highs, but still at near $200 a tonne. It's at very elevated levels, and the profit margins and the free cash flow coming off BHP, Rio, Fortescue is very attractive. Out of those names, the one we stay exposed to is Fortescue. Cochlear, we continue to hold this in portfolios. We're supported around that 210 level. Goodman Group tracking sideways where it is at the moment, almost 15% expected earnings growth, but on less than a 2% dividend yield. The stock's now looking expensive. Any consolidation over the next 2 to 3 months, you could buy it again. I think the next move's likely higher, not lower in Goodman Group. Stocklands Group, comfortable with that. We hold that in portfolios. Wesfarmers and Woolworths, we're shifting to an overweight position on those names at the moment. In the case of Wesfarmers, we're looking for potentially a special dividend return of capital to shareholders. So continue to be attracted to holding Wesfarmers, a little over 3% dividend yield. Macquarie Group, as I mentioned, we've taken profit on CBA, added a small amount of Macquarie into portfolios, and would be happy to continue to add to Macquarie on a pullback if we see a softness in the US market. A2 Milk, are we getting into a period where we see the bad news priced into this stock and a recovery in the next 6 months? We're sticking with A2 Milk. The stock price from a pure technical standpoint, about the only positive conclusion you can draw here at the moment from A2 is that we've had a slight bounce off the $5 support level. The price action's above the moving average. Obviously, if we were to see a move lower and a take out of that $5 support, it's going to be negative. But for the moment, there's a sign of a little bit of buying interest starting to pick up here in A2 Milk, but not really any news present at the moment to materially change the expectations there. Lendlease, I like this from a long-term fundamental recovery standpoint, so we continue to see value there at around that $12 support. Woolworths, I like that at the moment as a defensive place to have money. Mirvac Group, under algorithm buy signals, it's performed well since creating the higher high, the higher low here throughout this sort of 220 level thereabouts, now pushing 270. But again, have a think about the SLF as a simple way of just broad exposure to property. Centre Group, the same thing. Think about SLF as a replacement. CBA, I don't think the risks are substantial up here, but the stock has had a good rally from the $80 algorithm buy signal there, now pushing 100. So you could think about just simply taking profit there and rotating into Macquarie, which is on fresh buy signals off that 150 support. Sydney Airports, have a think about that, whether over the next 6 to 12 months we're getting better visibility on a return to some level of normalised travel, but not really the catalyst there short term. Treasury Wines, I covered that earlier, but it's under algorithm buy signals. GPT's under buy signals from sort of anywhere from really, say, 440 through to the low there, maybe around 420. Now consolidating at around $4.60. Afterpay under algorithm buy signals, and if we backtrack, obviously it's done well and created these higher highs and higher low patterns. If we see a rally back up and a lower high, we'll see that shift to sell signals. It's one of the better performing stocks. If we were to go into the model portfolio and even just look at the top 20, if you wanted to track this and get the notifications when something's added or removed, make sure that you click on that and turn the envelope from grey to green. But you can see here, Afterpay's not in the model portfolio. I was thinking Aristocrat. So just to highlight how this works, when a stock switches from sell conditions into algorithm buy conditions, it's added into the model portfolio. So in the case of Aristocrat Leisure, it was added on the 2nd of December last year at $28, now trading 41, up 44%. So we've been holding it for 210 days. It includes the dividends that it collected during that time. All these columns are interactive, so if you wanted to sort of look at what stock was most recently added to the top 20, click on that, get the days held to the top, so we can see Macquarie's been in there for 11 days, Woodside 98 days, CBA's been in there for 101 days, Woolworths, etc. And the same, you can go through and have a look at those other model portfolios. Switching back to where we were, so Afterpay's under algorithm buy conditions. Woodside Petroleum under buy, it's in the model portfolios. Santos now under buy conditions, it's in the top 50 model portfolio, but our preference remains Woodside over Santos. Aristocrat switched from sell conditions there into buy. That was the period. That was the point it was added into the model portfolio. So just to sort of focus your attention on that again. So the reason why a stock gets added to the model portfolio is when it switches from sell conditions into algorithm buy conditions. That first signal, it's added into the model portfolio, and it stays in the portfolio until such time as the stock switches to sell conditions, which could be months or even years. So it's more of a longer term investment portfolio, the model portfolio, whereas the trade table's a bit more shorter term. If you'd like some tuition on how to use the trade table and interpret these double arrows, please give me a call, and happy to walk you through that. So going back to Aristocrat, under buy conditions trending higher. ANZ now, so what's happened, we switched from stocks that are under buy conditions into stocks that are under sell. The banks here, my strategy is when the Nasdaq's below the 10-day moving average, these are the areas of the market that I'm looking at as shorting instruments. So ANZ and NAB and Westpac rate sort of at the top of my list as shorting opportunities on the back of weakness in the US, and I'll draw your attention to the timing around that. Where do we get up to here? Aristocrat. So there was a couple there that I hadn't covered, so sorry. So just going back, so we've got Qantas under buy conditions, so algorithm support there around $4. Computer shares under buy conditions, so it switched from sell to buy there at 12. A good structure here of higher highs and higher lows. So the most recent signal there at around $13. The stock now pushing up to $15.70. James Hardie, so now we've switched into completed the stocks under buy conditions. We've now got stocks under sell conditions. James Hardie has a higher high in place now, so the sell-off that we see maybe back down to $30 or $35, I'd expect to see that switch to buy conditions later this year. Telstra, this is one of the few companies that we're staying long despite it being under sell conditions, so support there and moving into a higher high pattern. So the red and green arrows, again, just as a reminder, these are more interim signals, and the primary signals are the red and green boxes up the top there. Amcor under sell conditions, but I quite like this from a fundamental standpoint. So if we see a deep enough sell-off there, we're willing to take a look at that on a counter-trend trade. Our preference is Northern Star over Newcrest. Insurance Australia Group, one of the few counter-trend trades that we're looking at the moment. So CIMIC and IAG stand out as stocks that you may want to think about, despite the fact that they're under sell conditions. Rio, preference Fortescue over Rio. Dexus, preference SLF and Goodman Group, although we don't see Goodman Group doing too much short term. CSL, what I'd expect to have happen here is CSL to maybe push a fraction higher, and then on the next pullback we'd see that shift back to algorithm buy signals, and it would be added back into model portfolios. We had been long CSL for quite some time. So if we backtrack here, it switched from sell conditions into buy conditions back in 2015, and it stayed in the model portfolio all the way through to this period here. Now what we have is sort of a corrective consolidation move. Had resistance up here around 350, support down here at 250. If we were to just see this push marginally higher and then another sell-off in the coming months, I'd expect to see that added back into model portfolios. APA Group not doing there at present, under sell conditions. Ramsay under sell, but if you're looking for sort of low risk defensive income in portfolios, I think Ramsay's still a consideration. Medibank not doing there at the moment. Sonic Healthcare, we've taken profit on that. Transurban, largely taken profit on that, and we're not running much exposure there. Westpac, so keep an eye on that Nasdaq below the moving average. You can start to have a think about NAB and Westpac on the short side of the market. ASX, again, it's under sell signals, but we've kept. We have trimmed the exposure to the ASX, but have kept some positions in this because of the dividend yield franking credits. And I don't think the downside right at the moment is too significant there with the ASX. Coles, preference Woolworths over Coles. Brambles, expect this to break higher and shift back to algorithm buy signals, but obviously the focus is predominantly on the stocks under buy conditions at the moment. The index itself, so again, this is the top 50 index, but just keep an eye on this price action, and if we see it roll over below the moving average, but that'll be something I'll draw your attention to on the blog. Suncorp, really preference IAG as a recovery play over Suncorp. ANZ, so within the banking stocks, my focus is more NAB and Westpac at the moment on the short side. The only thing that we're on the long side of there is Macquarie. So you can see there the resistance levels that I've set up in NAB. We actually started running a very small short exposure position in NAB and Westpac, but won't really start to build those positions into anything meaningful unless we see the Nasdaq sort of move below that 10-day average. BHP, preference Fortescue over BHP. QBE not doing there at the moment, under sell conditions. South 32 under sell. AZJ under sell conditions, clear lower lows, lower highs. Orica, clear lower lows, lower highs, under sell conditions. AGL, clearly trending lower, under sell conditions. And Ampol, so the bounce that we've had from 22 back up to $30 is near resistance, so I think that's under sell conditions. Trying to identify when we might get a pickup in buying interest in Origin, but any time it sort of spends a day or two above the average, we see it back down below. The low there of the recent trends probably around that 380 or 387 to be exact. I think just need to be a bit patient. We really need to see this sort of more turning around. Certainly the volume's picking up around these lows, so continue to rates pretty highly on a stock that you want to continue to monitor for the potential sort of beginning of a recovery there. And there we are, back to zero. So just to recap a couple of the ETFs that we've been focusing on. So Asia ETF, we've been building long exposure here, like the look of JD.com, Alibaba, so some of the large tech stocks that this ETF provides exposure to, we like those as individual stocks. A simple way to play it is this Asia ETF. The other one that we continue to hold or build a large position in is the Cure ETF, which is US biotech. Look, there's some risks here if we do get a risk-off period in, in particular the Nasdaq, that you may see some selling in this, but it's a high-quality portfolio of biotech stocks, and we're staying sort of fairly heavily exposed to this as a position at the moment in portfolios. The other ETFs that we're running at the moment is SLF, which is the exposure to REITs, and the India ETF, which we had a signal on, has rallied, just highlighting this as a trade from sort of 47 up to 54. And the other one to have a think about, we looked at the IZZ at the beginning of tonight's session, but the other one to have a think about, which I flagged on the blog, is the IAA, which is the iShares Asia 50. So your focus here is not just on China, it's across all of Asia, and it's the largest 50 stocks by market capitalisation. You've seen this rally now from sort of $111, $112 there up to around 118. In general, the valuation and the PEs are not as demanding, and we're coming off a lower base in these Asian markets than what we are in the US. Thank you for listening in, and I look forward to speaking again next week, and I'll continue to update you daily on the blog with the opportunities that we're focusing on in the market.